What's going on YouTube? Here I'm back making another brand new crypto TV episode. In today's video specifically, we're going to be talking about where do I invest my crypto profits. Now, this is definitely a question I've been asked a lot through the space, and I finally decided to sit down and make a video discussing with you guys where exactly do I invest my profits. That's a pretty big question. Do I reinvest them back into cryptocurrency? Do I pull them out and buy a Lamborghini? Do I reinvest them into other sources of income, or do I just leave them into my bank? These are questions I'm going to try to answer throughout today's video. So definitely, if you are new to the channel, definitely make sure to subscribe, turn on post notifications, leave a giant thumbs up, as this does help support the YouTube algorithm. And let's jump into today's episode. All right, guys, so 2021 is basically the year for financial freedom, especially for millennials like myself. I'm 23, and boy, oh boy, this year has pretty much just been the craziest whirlwind of things just to talk about and do and explore, especially within the financial industry. We've seen things like Dogecoin, Shiba Inu, Robinhood, Elon Musk. We have just topics all over Bitcoin, cryptocurrency as a whole, investing in the short term, in the long term, ETFs. Just there's so many things to talk about within the space that I just thought we should finally sit down and understand where we can invest our money after we've made these profits. Now, I know a lot of people, especially people my age, 23, these millennials, have been constantly coming up with ingenious and creative ideas of where to invest their money just to get away from that whole 9-to-5 lifestyle. So hopefully we can touch upon that and how I've figured out my skills that have basically allowed me to create some ways of passive income and investing in the future for myself. Now, we're going to be talking about a lot of different ways that pretty much refer directly to crypto profits, as I do specifically focus on cryptocurrency here on the channel. And a lot of my profits that I've earned is from cryptocurrency directly, as well as just YouTube and things like that. All the money that I do earn, a lot of this is directly what I'm going to be talking about, but you don't necessarily have to be a cryptocurrency trader or enthusiast to use some of this information. This can apply to anyone in the space. Maybe they didn't make a lot of profit in cryptocurrency. Now, I do have 4 strategies that I do want to talk about with you guys today. Now, there aren't set in stone. It's really just the 4 that I've, over the past couple of months and years of doing research, have been able to figure out that works best for me. And I'm always constantly searching for another strategy to add on to those 4 things that I've learned to better myself in the future. Now, the first thing to start is to have an emergency fund. The second is a Roth IRA. The third is out of retirement investing. I know this is going to be crazy. And the fourth is obviously to save some money for taxes. Using those 4 key rules that I've pretty much discovered, I've been able to create a passive way of earning money or just setting up those profits to continue to make me more money at a lower risk and conservative style of trading. Now, the first thing I want to talk about is emergency fund. So what exactly is an emergency fund? What does that mean? Especially if I'm talking to a lot of young people here, maybe older people in the older generations kind of understand this. But what I mean by an emergency fund is basically having money, liquid cash. It doesn't necessarily have to be physical cash. It could be in the bank. Being able to easily obtain that money to ultimately pay off, things that you don't expect to happen. So maybe your car breaks down. Maybe you need a new engine. Those are the key topics that we're really trying to discuss as an emergency scenario, an emergency fund, something that's unexpected that happens. You then have this money that's saved away that can then be used to apply to that. And the reason we do that is so I don't get into debt, throw me in a whole whirlwind of emotions, not having enough money to invest or to pay for those bills. That's why I have that money stored away, God forbid, in case something happens. Now, I do use that money to actually make me interest as well, which I'll talk about in a second. So for me personally, I have about $10,000 set aside in a money market. That's where I put $10,000 in. This covers about 3 to 6 months of expenses. So have that set aside and have it being easy access, and obviously try to get some interest on it, which is why I put it in a money market and not just $10,000 cash in a drawer. Now, the next key thing is a Roth IRA, and there is a ton of information to discuss with a Roth IRA, but I highly recommend you set one of these up. That's personally what I do. It's basically considered an individual retirement account. account. What a retirement account and what a Roth IRA specifically is used for is building towards your future, creating that nest egg of ways to invest money and slowly grow this nest egg of money that eventually compound interest and creates $1 million or just a big lump sum of money that you can retire on and live peacefully and financially free. So when you have this amount of profits from cryptocurrency or whatever it is, I did set some of this aside personally for my Roth IRA to basically build to my future, because at 65 or 59 and a half, I would like to retire and I would like to have some money to fall back on that I could potentially live on for the rest of my life. And there are key ways of actually moving money out of that, which actually keeps the nest egg still growing while taking some of those profits out, which is, again, another thing to discuss later on. Now, when I say Roth IRA or retirement account, a lot of people might get this confused with a traditional IRA, and it is slightly different. It's more so where the taxes come out from. With the traditional IRA, it's usually pulled out of pre-tax money. Either it hasn't been taxed, like I'm a 1099, so the money hasn't been taxed just yet, and then I can leave that in there as a safe haven, and when I retire and I pull that money out, then it's taxed. While a Roth IRA, when I put money into the account originally, I'm taxed before, I'm taxed now on the money that's invested in. And then when I retire, I can take all that money out, one lump sum, whatever I want to do, and it's not taxed at all. And that's what I like so much about a Roth IRA, is because it's untaxed at the end of retirement. Now the question is, you do want to set up a Roth IRA, but where exactly do you go about investing into one? So there's a lot of different brokerage funds out there that you can choose. Personally, I've chosen Fidelity. The reason I chose Fidelity is it offers a way for me to actually actively manage my positions in my Roth IRA, as well as they do offer either low or no fees at all, and there's no minimum deposit. Some places like Vanguard and things like that may offer a minimum deposit of $3,000, and that's really not likely for some people that don't have that much money to just throw into the market all at once. And that's why I like using Fidelity, because they offer a no minimum amount to invest into it. And the other thing you guys have to consider about Roth IRAs is actually that they have an annual cap, the amount you can invest into it. What I mean by this is they have a restriction on how much per year, because of how crazy the tax savings is they have a cap at $6,000. So you're actually not allowed to invest more than $6,000. But what's really cool is when you first decide to set up a Roth IRA, you can invest from last year's as well as the current year's amount. So that means you have a total of $12,000 you can invest into it that will earn you interest compounding over the next couple of years. And then you can contribute $6,000 occurring each year moving forward. So I've started investing in my Roth IRA about last year. That's pretty much where I started, probably at the end of 2019 into 2020. Because of that, I was able to deposit the maximum amount for 2019 of $6,000 and the maximum amount of 2020, which was another $6,000. So in total, I deposited $12,000 into the Roth when I first set it up. And now that it's 2021, I deposited another $6,000, leaving us at about $18,000 total invested. And I've been dollar cost averaging since then. So my $18,000 has progressively grown into over $22,000 in just a couple of months, which is an absolutely insane price jump. Now, since I've been investing that maximum amount the past 3 years until I'm 65, that means every single year I've been depositing, or I will be depositing, $6,000 each year. That adds up to about $274,000 in principal. And I know that sounds like a lot, but if you break that down over the next, 40 some odd years, since I'm only 23, it's really not that much invested. And the cool thing is you can just consider this like a external savings account. So it's really just money I'm setting aside for my future. Now, because we know about compounding interest, and if you choose your mutual funds wisely inside your Roth IRA, you can look for mutual funds that normally beat the S&P 500, which is around 10%. So I choose to invest into 12 to 15% averaging per year mutual funds, and compounding that interest over 40 years, you can see that it adds up to over $8 million, which is insane because it's tax-free at the end of 65. So what happens when you max out of your Roth IRA, or you just want to have some more diversity and you don't want to just put everything into a Roth IRA because you know whatever you put into there, you really can't touch until you retire? Well, that's where out of retirement investing comes into. And I know there's a lot of things that you guys are probably wondering, am I buying gold bars? Am I buying silver coins? Am I buying real estate? Well, I'm going to try to answer that question as best as I can. Now, I know diversification really really covers a broad topic of things, but what I've focused on specifically is out of retirement mutual fund investing. Now, I didn't know this, and I've been spending quite a bit of time researching this, and I always say do not invest in anything you don't know, but looking at mutual funds out of retirement was something that I didn't know was possible. I always thought investing in your Roth IRA into those mutual funds was the only way to access mutual funds. I had no idea I could just set up an individual brokerage, which I did on Fidelity, and just deposit into mutual funds. And the cool thing is it's the same mutual funds as the ones in my Roth that I did so much extensive research on. And I also found other ones that I was able to invest into because I have so much more funds available to me. So the cool thing is there's no cap when investing in out of retirement mutual funds. I personally have invested, after doing this extensive research on these mutual funds, over $100,000, as you can see here. Now, I didn't deposit this all at once. It did take a couple of months where I was figuring out what I should invest into, which ones look the best. My confidence level in this, as well as how comfortable I was with moving this amount of money out of a bank account and into something like this. But over the course of a couple months and doing my research and reading books, I did come to the executive decision that this was a smart and long-term strategy to saving money. And the reason I did this is obviously because leaving it in a bank account or under a pillow really doesn't make you that much interest. And if anything, the inflation on the dollar, you almost lose money leaving it in a bank account or in a money market. So with the average percentage of 12 to 15% I make per year on my investments into mutual funds in that individual brokerage, I've actually accumulated a lot more money that isn't locked away. It's still liquid. At any time I want, I can withdraw those funds and then obviously pay capital gains tax. But I do have that option of just setting that money aside in a way that does accrue interest, and I can also eventually take portions of it out. So the question becomes, and I'm sure a lot of you guys are asking, what types of mutual funds do I invest into? And this is where I've spent a ton of research figuring out for myself. And obviously, if you guys want, I will be sharing maybe in another video which specific ones I've invested into and why I've chosen that. But ultimately, as a whole, I want to give you guys the different strategies that I use when picking out certain mutual funds to invest into. The S&P 500, on average, you can look at it over 10 years, usually goes up about 10%. So what I try to look for within mutual funds is a percentage gain of about 12 to 15% per year, and those are the ones I invest heavily into. I also prefer to use the ones that are made by Fidelity just because those are the brokerage that I choose to use, but I also use other mutual funds that are created outside of Fidelity that I've invested in. They usually are diversified into small cap, mid cap, large cap, as well as high dividend yield. Those are usually the ones that I stick around investing into. The next thing I look at is the mutual fund's inception. What I mean by that is how long have they been around on the market? Obviously, something that's only been out for 4 or 5 years is at much more risk than something that's been out for 30 years. So I tend, even though I do invest in some of those younger ones, I tend to invest more heavily in the ones that have been around the longest. So if a mutual fund is around for like 30 years, I tend to invest heavily into those over others. When you look at something like that, if a mutual fund's been performing fairly well for the past 5 years, it is more of a risk because you don't know how it is going to develop in the long term. But something that has a good track record of 30 years of constantly making 12 to 15% per year, I tend to invest more into that. Obviously, I also talk about the annual return and how that is calculated. What I tend to use as an indicator is the 10-year average, as well as how the entirety of the account, how long and how much has this made over the higher inception of that mutual fund. The next thing I do is kind of break it down. Hopefully you guys understand. Something that's been out for 10 years, that's averaging about 12% per year, 15% per year, is pretty much on the lower risk scale, a more conservative style of trading. And you can break that down. Maybe the first year it does 5%, the next year it does 25%, the next year it does 40%, but then you have 3 years of negative. Maybe it's down 10% that year, down 15% the next year, but on average, the mean of those 10 years equates to about 12% or 15% per year averaged out. That's why I'm investing in this for the long term. So really, that's where I've been investing majority of my money until I find out maybe another aspect or revenue to invest into, maybe real estate or something like that. But as you guys can clearly see, I have invested into all these. I have a lot of mutual funds that I've chosen. And then moving on to the last step that I, really think should be number one, but just the way this order was made, taxes. Taxes is a big one, guys. You guys have to understand that saving for taxes is a real thing. I've seen way too many people get burned spending all their money on Lamborghinis and useless things, not realizing how much they might owe in taxes at the end of the year. So there are a few steps you can take to kind of lowering your tax bill. What I've done is, since creating this YouTube channel, is actually make an LLC, which is a way for me to start a business and write things off, which is obviously a good step if you do plan on maybe getting involved into cryptocurrency or creating your own content, is to create some sort of LLC where you can then write off certain things. The next step you can do, and what I recommend, is obviously have a good accountant that knows a lot about cryptocurrency taxes. Now, the last step is basically setting up something called a Sep Ira, which I'm in the process of creating. This is a way where you guys can actually put money aside, similar to a traditional IRA, but something more for self-employed people. This is a way you guys can store money that is untaxed, whether it's a 1099, you can put that money away. Otherwise, guys, that's pretty much going to wrap up today's video. Hopefully you've learned a few things, and I do want to make videos and content more like this. So if you have any comments about which you'd like me to dive deeper into, feel free to let me know down in the comments below. Otherwise, definitely make sure to subscribe, turn on post notifications, leave a giant thumbs up, as this does help support the YouTube algorithm, and I'll see you in tomorrow's video. Peace.